fire and brimstone coming down from the skies, rivers and seas boiling,
40 years of darkness, earthquakes, volcanoes,
the dead rising from the grave, human sacrifice, dogs and cats living together, mass hysteria.
Hello everyone, and welcome to your Austin Real Estate Daily, to our daily video blog about Central Texas real estate. My name is John McClellan.
I'm Jason Lewis.
We're going to give you a little bit of an insight about what's happening in our neck of the woods when it comes to mortgages and real estate. Today we're going to be talking about
the worst kind of borrowers, John.
And those are?
John, those are the worst kind of borrowers are the borrowers with the good credit. The ones that have money down. The ones who have been through this process before in the past. They bought 2, 3, 4 properties.
I bought houses before. I know what I'm doing. You don't have to explain it to me.
Are the worst kind of borrowers, and why are those the worst kind of borrowers, John?
Because no matter how well you set their expectations, they don't listen. It's in one ear, out the other. They've done this before. They know all about it. But guess what? It's a little bit different nowadays.
Times they haven't changed, John.
That's right.
The days of coming in and basically signing your name, knowing you've got good credit, knowing you've got money in the bank, those days are come and gone.
We have to do a few more things than we used to, Jason, when it comes to processing a loan. It's a little bit more expensive and a little bit more time
intensive
things.
And I think you had a little rant on, they kind of labeled all the stuff that we have to go through that you wanted to show our viewers.
I do have a little something to share with you. Yeah, Jason, we were talking about how hard it is to do a loan nowadays. Well, nowadays when we do a loan application, we take the loan application, we tell the borrower it's only going to hurt for just a short period of time. Then we ask for everything under the sun. Then we order an appraisal through a third-party company. Then we pray a little bit and we open title. Then we do a written BOE on every single job they've ever had, and that costs $20 a pop. Then we have to do a verification of deposit on all their bank statements that they gave us, and that was $20 a pop. Then we verify through a third-party system, a very expensive third-party system, their Social Security numbers, W-2s, 1099s, K-1s, 1040s, corporate tax returns, partnership returns, LLCs, and DBAs. Then we pull a MERS report, run a HMDA report, check their USPS, do a fraud alert, do LDP GSA report, then we do a KBRS on all government loans. Then after that, what else do we do? Oh yeah, that's right, we Google you, your spouse, your phone number, your work number, your address, your landlord, your job, your boss, your company, the company owns, your CPA, a random MBA, the seller, the agent, and your mom. Then we're going to pull a credit report on you just to make sure your credit hasn't changed. And then we're going to do another verification of employment just to make sure you still have that job. And then if you're lucky, if you're really lucky, we're going to send you to QC and they're going to do it all again. So Jason, that's kind of how I feel about it.
Well, tell us how you really feel, John.
Right, I know, right?
So we understand there's a lot going on in setting expectations. We talk about this constantly, letting the borrower know what all we have to deal with, because there is a lot of crap we have to deal with. So if you set expectations properly, you sometimes scare them, but you can also look like the hero, right?
Yeah, so setting the expectations up front, maybe the next day, and then set them again, and then set them again, and set them again. Setting expectations is not a one-time event during this process nowadays. We've got to constantly remind people, hey, listen, don't forget of the mortgage meltdown that we just went through the last couple of years. All that stuff you read about in the paper and watched on the news, well, guess what? You're right in the middle of it. You're knee deep, so we've got to wade through this stuff. So set those expectations over and over again.
All right, guys, you would have also have been living in a bubble if you have not heard about the foreclosure freeze. Well, this has created a lot of confusion out there because of so many people that are buying foreclosures and short sales, which are similar but quite a bit different. So John, the short sale...
Yeah, so let's talk about short sales and foreclosures. I think there's a little bit of misconception that they may be actually the same thing. Well, they're not. They're a little bit different. A foreclosure is when the bank has actually gone in and taken the house away from the old homeowner of the property. A short sale is when the current homeowner goes in and negotiates with their current lien holder for a lower principal amount on their payoff, so that way they can sell it to somebody. So the foreclosures is when the bank's already taken it. Short sale is when the homeowner still owns it, but he wants to sell it short of what he owes on it, so the bank's going to take a little bit less. So the problem we're running into right now is foreclosures are being held up. Hopefully the short sales won't be held up any more than they already have been lately. I know it takes a while to get a short sale done, so we'll just see how this whole process makes its way through the system. I think in the short term here we're going to see inventory numbers go down because of these foreclosures coming off the market, but I think long term we're going to have a backwash, as it were. Nobody likes backwash.
Sure. So buying either one of these is a difficult process, so
That's right.
you're getting a good deal, but be prepared to wait to get it.
That's right. Guys, thanks for watching us today. You're watching Austin Real Estate Daily. My name is John McClellan.
I'm Jason Lewis.
And we're two mortgage guys here in Austin, Texas. If you need help with your lending needs, give us a call. Go to our website. Also check out our trusted partners right over here. Check out comment sections below. We got a little survey question over there on the next side. We'll see you guys next time.
Take care. Bye-bye.